Good morning, traders. It is Saturday. It's like 7:30 a.m. And in today's video, I'm going to try to figure out just how this market is. It seems pretty, I'm talking about stocks mainly. Looking at the S&P. I want to look at the S&P. I want to look at like some of the top holdings of the S&P. So we look at Apple, Google, and Microsoft. And see what we can figure out, right? Like, just how is this? Let's. I'm gonna start with some moving averages. I did on this last dip. I tweeted about these. This moving average that I used in these severe pullbacks, right? And it's that red line, and it's held up. It's held up plenty of times during, the most grim of market conditions. And we're looking at something fairly grim, right? With the Fed talking about several basis point changes and stuff in terms of tightening monetary policy. But, I don't trade rhetoric, right? Let's just stick to the chart. So what we had is we had that moving average hold up and during the February lows, right? Even like March, we didn't really get a solid close below it. Definitely good rejection here, and we're back at the same moving average today. This is second test. Now, during the stream on Friday, which was just yesterday's live stream, I said I want to see the ES close above at 61.8, and we did not, right? 61.8 being that red line where 43.03 is, which would make it a 61.8 retracement from this swing low to that swing high, right? So that's what I was looking for, and we didn't quite see it. So now, what do I see on the chart, right? That's the tricky part. It looked like we had a breakout. It literally looked like we had a solid breakout, right? We had our support, resistance. It was kind of looking like a bull flag for a little bit. If we do that, right? And it broke out, retested deep, retested again, took off again. Market wasn't happy with what Powell was talking about the day prior to. I'd hate to try to make it conform, right? I'd hate to try to do that. But let's just drag it out a little bit, and based on these trend lines, it looks like a possible descending broadening wedge on the ES. Now, it did switch time frames, so yes, this moving average is going to be a little higher. I'm going to get rid of that for now. Let's remove all indicators. And if that's a descending broadening wedge, and it's an ABCDE formation, right, which would be 1, 2, that's our C, that's our D, and E is an extension. All right, I'm just gonna change the color on this one, and let's do like a bright red, make it like 2 pixels. Let's see these lines, right? So we see something like this, and the E leg is usually really grim, right? Last time we saw one of these on the ES wasn't too far away. It wasn't too long ago. It wasn't too long ago. It was right here, right? So last time we saw one of these guys, it broke the trend line to the downside. It looked like absolute horrid shit, right? Traded there for like 4 hours plus, and then it bounced, right? And literally that one was a 1.618 extension, B, C, D, E, right? And there's actually a small one and a bigger one. But the way these tend to work out, the way these tend to play out is the reversal happens at one of these 3 levels, right? This is the smaller one. I think the bigger one within is still the same bottom, and I'll fib that shortly. But if we were to do something similar, right, if we're doing something like that, then we could come down just a little lower on Monday, right? and knock out 42.39, maybe even 41.82 for some like max panic, right? I think if we gap down on one day to 41.82 and we get a close above it, it would be a good place to get in long. That's all I'm seeing on the ES right now. As for like formations and moving average support, that's looking for support like now, because this market looks grim. Look at this 4-hour candle. Like, this looks like shit. Some of the most savage 2 days we've seen. Alright, what else can we try to extrapolate from this chart? I'm going to extend COVID dip, right? Because that was a significant market move. I'm going to try to take my fibs. Right now, I'm just like freestyling this one. Right? I'm just trying to figure out what in the heck. Like, what the heck, man? Why does it look so bad? What did we do? Did we break the market? Actually, I don't think we broke the market. I think the Fed broke the market. And I think they're trying to fix it. And they don't realize the harder they try, the more they break it. Right? That doesn't look too promising. What if you do something like this? You kind of have a trend line, right? I don't like that. Don't like that at all. There we go. And if I was to like doing some trend break analysis, right? A trend break analysis would make me want to use one of these lows, probably that most recent one, to try to find a trend continuation 61.8. And we kind of get it. So where was our C0 extension? I think we could bounce 41.25 again, right? If you don't turn around, by 41.94, man, I'd say the bear market is on, right? That's gonna be my line in the sand, especially if you close below the long-term moving average. Let's look at Apple. They got earnings coming out this week. So one thing that could really save indices and the market itself is positive earnings, right? We want to see good earnings come out this week. And just looking at this last move on Apple, it's pulled back almost 61.8%. So we want to see 160 hold. This would look like a decent buy, right? And I'm just basing that off what it's done in the past, right? So, for you guys that are new to the video, new to my videos, new to the channel, I don't even know if the YouTube algorithm shows us enough love to showcase this to new viewers, right? But you can see that red line holding, all right, especially the third time around. And so we want to see the same thing happen on a smaller scale, where that red line, that 61.8 fib retracement holds, right? And that's right at 160.88. So at that point, I'd be looking for an Apple long. Let's go ahead and just kind of set an alert for me. Yeah, you should probably do that too. What else? Let's look at Microsoft. I have not looked at this chart in a little while. That looks grim, man. That looks big shit. And it's also earnings next week. So next week's going to be really important. I'm still drinking my morning coffee as I'm doing this. Kind of want to enjoy the day, but I wanted to get some data out for everybody. And looking at Microsoft, 275 should hold. If it doesn't hold, man, it's not going to be good. All right, we could be in for the big one. All right. Before I like fearmonger, actually, I kind of want to redo on that. Let's do this before we redraw that trend line. I think if it doesn't hold, it's gonna be looking for liquidity, which should be at 263, 255. Does that line up with that trend line? No, the trend line looks way lower. Yeah. So Microsoft looking like it broke that most recent trend, right? Like definitely broke this. Yeah. Not looking happy there. Not a happy chart. Let's look at Amazon. I think Amazon's looking... looks like shit too, guys. Like, not very promising. That's a sub 61.8. You can just see it. Yeah, it needs to pull up in pre-market. Okay, I'm not going to look at these individual stocks anymore. When's earnings? Also this week, right? So we got a big week coming up. It's gonna be super important to see how the market reacts on these earnings, because the indices need it, right? Like they need this boost. And did Facebook have their earnings? I know they dumped again. No, it's also this week. So we're going in for a really big week in the market. From what I'm seeing on the ES itself, it doesn't look that bad, right? Like we see where support could be. We see the formation. It looks tradable. So yeah. Do I think what do I think is gonna happen? I don't know. I just know that the market needs good earnings, and I think they should be decent. And yeah, I think I highlighted the support levels and how I would trade this next move. How I would trade this next move would literally just be buying calls on like the S&P or UPRO based on where this bottoms out. So let's go to like the SPY chart. This is how I would trade this week, right? I would not want to trade stocks individually. Right, but let's say this bounces off. I would just take my fib. I'd click swing high, come down to swing low, wherever this swing low bottoms out. So if we bottom at like 422, I'd want to buy the 439 call, right? Like 2-3 weeks out, and probably sell when we get up there. Like that's how I'm gonna trade those. Anyway, hope that gives you some insight on what to expect from next week, right? Do I think we're headed for another COVID meltdown? No comment. I'm going to wait on earnings. I'm going to wait on what the market says. And yeah, but that's all I've got. Thank you guys for tuning in to today's video. Smash that like button. There's plenty of links in the description if you want to learn some of the fib methods that I used and a lot more. There's a workshop. It's like 3 hours long. It's everything I know about fibs. Follow us on Twitter. Follow us on TradingView. And hop in Discord. I'll see you there. Thanks for tuning in. Have a great weekend.